Saboo, head equities at Anand Rathi, is also joining us now. Varun, afternoon. How are things at your desk? Are people keen to hang on? Are you advising them to trim profits or shifting positions to areas which have not moved much? How's the activity? Give us a gist.
Yeah, I thanks again for inviting us on your show. Uh, if you go back and see all my commentaries, actually we have been quite on the positive side. We still remain quite bullish on the markets. I have mentioned this before. I'm reiterating this. So one has to keep in mind that when we look at the markets, there is an element of fundamentals, how they are moving. Second, also on how liquidity is moving, right? If we talk about fundamentals, there is nothing better than our country. Today, we're talking about our country where we'll see at least a 14% plus odd nominal GDP growth. We are seeing every year analysts creating their earnings estimates. And since the last 4, 5 years, every time we are coming and upgrading earnings across. That means it's always that earnings are outperforming. Uh, so if you see overall in terms of the macro level, our infra growth has been stupendous, right? The way country has been seeing infra across, be it power, be it digital, be it road, be it railway, anything. So that's working out to be very well in the country. And adding on to all this is where your liquidity flows are. We are seeing now SIPs touching upwards of 25,000 crores for mutual funds. We are seeing across AIFs, PMSs, family offices, etc., growing, and numbers are also coming up on them. We are seeing pension funds growing. We are seeing insurance money coming in. So liquidity is extremely strong. FI ownership has gone down significantly, which doesn't impact us anymore. So I think we are in a shape from where we'll again do well. I don't see any concerns right now. We are advising the same, that one should remain invested. There are concerns. People are talking about valuations now being a little high, but if you see, the valuation is currently at about 20 times on Nifty FY26 earnings. I don't see a concern at 20 times where we're going to be seeing a growth of upwards of 14-15% that we're talking about. So, how do you assign a peg to the to Nifty? Uh, who decides that a 2 times peg or a 2.5 times peg is correct, or even a 1.5 times is correct? In my view, I think the way stocks are trading at, I think if one has to give a similar kind of peg to Nifty, which is upwards of 2.5 times, we still have enough and more room to go. So I don't see any concerns right now. We are advising people to remain invested, buy more. I think rally will have much more legs.
Okay, stay put. That's the messaging coming in. By the way, just look out for what the global markets are doing because Europe has had a sharp crack. You've got the Eurozone inflation, which has dipped, but across the board, there is some amount of nervousness. We're almost down 150 odd points for the DAX. FTSE as well trailing in the red. The CAC is down 0.5%. And the broader markets as well, the FTSE MIB as well as Stock 600 are taking a knock of anywhere between 0.5% to a little over that. And so is the case with the US futures too. We're down 130 points in the Dow futures right now. S&P futures down 0.5% and the Nasdaq futures as well down over 100 points as we speak right now. And that sort of weakness would rub off on our markets, although for now we're fairly resilient. But Ansh is here to detail out all the volume buzzers that he's been tracking in trade. Ansh?
Right, so Deepak Nitrate will be the first stock in focus as the stock has given a breakout from its cup and handle chart pattern which was intact for last 2 months. Also in addition to this, the stock has also touched a 2-year high as well with good volumes. Apart from this, HDFC Bank will be in focus as the stock has given a breakout from its 5-session consolidation pattern touching 11-month high as well. Torrent Pharma is also in focus as the stock has given a breakout from its downward sloping channel indicating a potential reversal in trend on upside. Lastly, LT will be in focus as the stock has given a breakout from its downward sloping resistance with good volume. So keep an eye on the stocks.
Point taken, so we'll watch out for all those price volume buzzers. But in the meantime, my colleague also caught up with the management of Mercedes to get a sense as to how the luxury sales have been so far. Listen into a slice of that conversation.
We have 3 cars in the portfolio, and if you see our first quarter results, close to 5% of our car sales are EVs today. This is, I think, clearly showing that the transition is coming, but it will come at a slower pace because I keep saying EV transition is a marathon and not a sprint. So it takes time. For us, EQA is a big step because this car comes almost at the on-road price of a GLA, which is one of our best-selling SUVs in the luxury segment. So I would say that for now, customers have a choice between gasoline, diesel and an EV.
Let's talk about general market because we are in the middle of the calendar year. First quarter has gotten over. How's been the market so far?
I think it's been a great H1 for us. As such, we had a great quarter one as well with double-digit growth. I feel that, of course, quarter two was a bit more muted considering elections, heat waves, and most of our customers are also traveling to other parts of the world. You know, they are in UK or in other parts. But I think the full year, our outlook still remains positive for a double-digit growth for Mercedes-Benz.
And talking about more models, every year we are used to seeing more models from your side. All models, they are on track to launch?
Yeah, we have 12 new cars that we committed this year. We have done 6 already in the H1. The balance 6 will happen in H2 of this year from July to December. The EQ A is the 7th car. We have also said we will get 2 more EVs. So there will be 3 EVs this year that we are launching. And of course, it's also public knowledge that, the most awaited car, which is the long wheelbase E-Class, also makes its debut at end of the year. We also have a couple of units left now for the current generation E-Class. There is a great demand even for that. So I think, this year we should stay on track with the 12 launches that we committed to the market.
Okay, one last thing. Budget this month coming. Sometimes it happens that government finds the easy target in luxury car players to tax them more. What is your assessment, expectation, demand from the government not to tax you more?
I think firstly, the growth in luxury segment and also for passenger vehicle market has been the excellent growth in road infrastructure. Today we were just discussing you're going back to Delhi by driving down because that makes more sense than flying. I think and that's also driving our growth because people want luxury cars, they want safer cars and therefore we would be keenly watching that the capital expenditure on infra, especially roads and infra continues because this is something that will drive growth. Not only for us, but I think it also drives economic development. So that's one thing that we are keenly looking forward. The second thing, of course, when we spoke about electrification, and here the government has already a concessional rate of 5% GST. We understand GST is not part of budget, but can there be a long-term commitment from the government that these kind of tax incentives will continue for at least 8 to 10 years? Because it's again, I keep repeating, it's a marathon and not a sprint. And when you have to run a marathon, you need to be clear of what the conditions would be around and how much we as OEMs can also invest in this long-term futures.
Okay, that's the take coming in from the luxury car maker, that's Mercedes-Benz. But Varun, what's your view on autos right now? Given that most of them are sitting at their all-time highs, do you believe there's still value at this juncture? And would you recommend buying into any of the auto names?
So I agree with you that there has been quite a sharp rally that we have seen in autos. But that's backed by fundamentals, right? We are still seeing growth remaining strong. Yesterday, volume numbers got reported. All of them reported quite well, starting with Hero MotoCorp, which was absolutely a stellar number, which they reported, clearly indicating that things ahead look quite good with the kind of inventory buildup which has happened. So we have been very positive on the two-wheeler theme. We continue to remain very positive with that perspective. There was a little slowness in April and May, led by extreme heat. There was lack of any festive marriage season, etc. There was a little bit of a blip coming. I think things will start reversing materially. That's visible from the numbers in terms of the inventory buildup that we have seen that the company has done. So two-wheelers still remains fine. We like Hero and TVS there. In terms of four-wheelers, we are already seeing that on a very high base, they continue to report still 4-5% kind of growth. I'm not saying I'm very bullish on four-wheelers, but yes, partly I would still think Mahindra and Mahindra is one of the names which one can keep an eye on, considering the fact that there is scope for margins improving over there. Plus, they have their EV launches going forward, etc., which could be still an interesting play in the four-wheeler space. Apart from this, in autos, we don't see too much value anywhere remaining. We, in an ancillary side, more on the tire side, we remain very bullish. So we are extremely positive on Apollo Tyres and JK Tyres particularly. So these are two names which we really like in the Ang space, particularly tires. So we are extremely positive on tire as a theme from here also. Yeah.
Okay, positive on the tire theme and the overall sector that ways. But just flagging out some of the stocks which have lost out in the last few minutes. Max Healthcare saw a large trade and that stock is down 5% in a trading session. Prism Johnson has turned red. There's a downtick of 4%. Shriram Finance, a sizable cut of 4%. BSC is down. You also have Vodafone Idea in the red, and in the last few minutes, Hindalco has taken quite a bit of tumble as well. I see a correction of almost 5% which has happened from the top as far as Hindalco is concerned. It's holding out in the green, but okay, not showing as much on the screen as it is possible. But in the meantime, I also wanted to play out some of the sound bites of the management that we spoke with earlier today. DCX System is one such stock. They backed a large order of almost 1200 crores from L&T, and the management is quite hopeful of a solid growth from here on, plus an improvement in margins. Listen into that stock. It's up almost 13%. Listen into the management.
Improve our marketing capability. We have taken a big account, like we added Bharat Electronics, we added L&T, we added Lockheed Martin. There are couple of more to in the converting stage now. We are also enhancing our customer base as the domestic, as international. Definitely we are working for the improve our margin better. So for many reasons, we can improve the production capability, backward integration, supply chain system, logistic. Many things are there. Company is fully focused to improve margins, also to have a very good pipeline, healthy pipeline order in upcoming days. That is also we are concentrating. But we are fully focused. We are confident we are going to improve our margin and taking all this consideration in future coming days.
Okay, that's the word coming in from the DCX management post the order win from L&T. In the meantime, let's take it across to Sharad as well, find out what the dealing room chatter is and what are the stocks that are being talked about. Sharad?
Well, yes, in focus is Sumit Chemicals, and what we are gathering from the dealers is selling is coming from an FI, and it's expected that a domestic mutual fund has absorbed that selling and might be buying the shares. Interestingly, 5.5 lakh shares have exchanged hands in the day's trade, and the volumes have also been significant over the last two trading sessions. Now, overall, the FIs are having a minuscule 2.75% stake in the company, with the names such as BlackRock, Vanguard, and even not just bank also having smaller stakes in the company. Also, interestingly, if you look at the triggers, especially in the agrochemicals space, it looks like the bottoming out is there, as there is an improvement seen in the crop nutrient products which the company offers, and also the inventory situation globally as well as domestically has been improving for the agrochemical stocks. Now, of course, the companies are expecting to pick up this healthy demand by the second half of FY25 as well.
Okay, we'll watch out for the name and what's happening to that one. Quickly, Varun, a take on the power stocks, because they have run up quite a bit already, whether it's power financiers, whether it's the generators, or even the ancillaries for that matter now, right from a cables and wires to a transformer to other names. What within that entire power ecosystem would you still bet on?
Coverage on this space, but I can give you a perspective that we would be positive more towards the power financiers. I think they've been doing well, and they still have some value left if we go and see the valuation on the consensus basis, what it's looking like. So still PFC, REC stand as better picks than going in for the major power guys. If in the power producers we have to look at, I think NTPC still stands to be an interesting bet.
PFC REC is still a favorite despite that massive run-up that we have seen in NTPC. That blue-eyed boy of the entire power sector is still something which is positive for the investors, at least the word coming in from Varun. Here are what the Power Secretary had to say, because of course in the months of summer we had seen a huge spike. What do they have to say about the supply side of things? Listen into a slice of the conversation Power Secretary had with the media personals.
We had projected our 2031-32 peak demand is 384 gigawatt, and in the last 2 years we have witnessed a very sharp increase. This year, in terms of megawatt, it is already up by more than 9%, and in terms of million units, it is already up by about 11%. If we compare the Q1 of the current financial year with the Q1 of the previous financial year. So these recent trends we have fed in the model, and we are now working on for the projections. We are updating our projections. We have been working with the states some of the states have already updated their demand. Challenges are basically mostly related to the basically the preparation of the grid. What they do is they normally work on the RF mesh, and till the mesh is there, probably the meter doesn't get activated in the smart mode. It remains basically a normal electronic meter. And once there is a communication mesh, then it starts functioning like a smart meter. Then there are contractual issues like somewhere AMISP has come, but the single-phase meters are there and they need the three-phase meters. There are an empty number of challenges at the ground level. There's no policy restriction. The policy actually means that the two should actually work together so that basically the consumer at large need not to spend money. There's duplication of investment.
Right. Varun, what are your thoughts on some of these agrochemical companies which are focused on the domestic market? Have you guys started recommending your clients to buy?
Yeah, I think there are some of them which are looking okay. I think UPL currently seems to be decent after obviously having a bad quarter last one. But otherwise, the company has been doing well. I think what we understand, April and May are turning out to be decent for the company overall, and should turn out to be a good quarter. They have been. The bigger point which one has to keep a focus on is the leverage part, which they keep commenting on, the debt repayment part that they keep doing every single time. So we are still hopeful that this year also they will live up to reducing the debt by the amount they keep talking about. So that is one name which is good. We have been positive on Sumit Chemicals. We have been talking about it to our clients. So we remain positive there also. So I think in agrochemicals, these are two names which would be something we would still be okay with. And something related to agri, I think agri as a theme should do well considering monsoons are turning out to be good, and there is a little bit of hope that from the budget also we should see some positive around it. So I think one has to keep in mind that ultimately NBFCs like Shriram Finance and Mahindra Finance and all should also do well, which is another segment where we have been talking to our clients and we've been positive around it for a while now. So yeah, this is what we would look at.
What about the tire companies, that part of the auto ancillary? Anything which you like there?
Yeah, I just mentioned that we're very positive on tires overall. There has been a big structural change there. So we are very positive from the perspective that they take price hikes whenever there is a pressure coming on the cost front. If you see in May, these tire companies have taken price hikes. I think last week again they had taken another set of price hike, which is a very positive thing. So what happens is that the margin issues which used to happen, the volatility which we used to see in margins earlier, that has come off quite a lot. So earlier we used to see margins dipping to as low as negative. It used to go into negative territory earlier, right? Now that doesn't happen. Now margins say the peak and trough is somewhere between 8% on the trough side. Peak can be as high as 20%. And they somehow are maintaining now a 14% band in the worst case, 14-15% somewhere in the median, versus earlier the median being around 7-8%. So that's a big change we are seeing. So I think there should be a material re-rate in valuations. These stocks are available at 12-13 times earnings, which is nothing today, versus how the market, etc., has been trading. And for the growth which is there, I think these companies can easily trade somewhere between 18-20 times earnings. So I think there is good upsides available both in Apollo Tyres and JK Tyres from here.
Right, okay, that's the take coming in the tire stocks. That's the much preferred lot from within the entire mid-cap auto ancillary space at least. But Kunal, the auto charts that we've been talking about, M&M, Tata Motors, Maruti, what is it that you're liking right now?
So I think Ashok Leyland is the other stock which has done pretty well. That stock is now at 232, 235, much above the breakout levels or the big breakout points of 175, 185 for Ashok Leyland, which has been a major resistance for the stock on a long-term basis. So now also I think the stock looks to be in a fine fettle. It's going through a patch of consolidation because of the way many of the other auto stocks are also going through a patch of consolidation for itself. Tata Motors also I think is now making a comeback again about the 1,000 mark. So it's struggling a bit over the last few days, but I believe that if in the next few trading sessions or in the next 1 or 2 weeks, the stock scales past about the 1,000 levels, I would believe that momentum could come back again for Tata Motors. So going with the stronger names over here, Ashok Leyland as well as Tata Motors out of the other names.
Okay, Ashok Leyland and Tata Motors, that's the preferred lot from within the autos. But Kunal, let's also have your closing strategies or rather BDST trades on that note.
So I'll go with the first one, a buy on Liberty Shoe, a stock which on the mid-cap front is confirming a breakout on a multi-month, multi-quarter basis. So would suggest a buy with a target of 450. Stop loss could be kept at 385. And the second would be one ICICI Pru. We discussed this stock in the morning, confirming a flag pattern breakout about the 620 plus mark. So would suggest a buy with a target of 660. Stop loss at 600.
Okay, fair enough. Those are the top BTSC trades right now. Naresh, what about your recommendations?
On NLC India, the stock is broken out with good volumes. Would give a stop loss closer to 252 and a target price of 265. Second is a buy on IGL. The stock has given a major breakout. After 2 days of rally, has pulled back a little today. So a good entry point. Stop loss at 510, target price of 530.
Point taken. Railways is one space which has seen massive traction. It's been one of the key focus areas of the government. But what about this budget? What kind of expectations should one have? What kind of budgetary allocation can come through? And what about that entire Kavach scheme, which has been much talked about? My colleague Samir has done this exclusive story. He's picking up from his sources as to what we should expect. Listen into that.
Sources have confirmed that government is going to continue its focus on the massive upgradation and the expansion of infrastructure, and in the same direction we will see a higher budgetary allocation for the railways as well. Around 25 to 30% higher budgetary allocation year-on-year basis that we can expect from the government. Announcement might be there in the upcoming budget, and this means that for FY 2024-25 the budgetary allocation for railways will be somewhere close to 2.95 lakh crore to 3 lakh crore. And the higher budgetary allocation means that railways is looking for a massive transformation in the passenger side as well as when it comes to the digital service side. When we talk about the passenger side, Amrit Bharat train, popularly known as Jan Sadharan train, railway plans to roll out 250 Amrit Bharat train that have general class and the sleeper class coaches in next 5 to 7 years. For this year itself, railway has set a target to roll out 25 Amrit Bharat train, and not just Jan Sadharan train but also a clear focus on Vande Bharat train as well. For the first time, the sleeper version of Vande Bharat train will be out on tracks. The trial is likely to begin by 15th of August this year. Railway targets to roll out around 6 Vande Bharat sleeper train on long route journey, whether it be Delhi, Mumbai, Delhi, Chennai or Chennai, Havda. So in addition to Vande sleeper train, Railway is also looking to roll out around 8 to 10 Vande metro train that will provide intercity connectivity somewhere around 150 kilometers of running that will be done through the Vande metro trains, for example, route like Delhi, Dehradun. So that is what Railways is looking at. So apart from passenger side, Railway is also likely to come up with a super app, the IRCTC super app, and with this super app, Railway is planning to attract new customers in the freight side, especially in the parcel segment, the e-commerce entities like Amazon and Flipkart. Railways is looking to infuse to enhance the investment in Concor, the Container Corporation of India. So with the increased investment, Railways is also looking to provide more wagons to Concor that will help to increase the freight basket. So that's a larger plan that Railways has. But in addition to all this, the clear focus on Kavach, the safety mechanism will also be there. And for the same, the higher budgetary allocation for the safety will be done for the FY 2024-25, and railway targets to cover 4,500 kilometers of rail route network through the Kavach system. So that's what we can expect from the upcoming railway budget.
That's the eye on railway budget and the chatter that we're picking up. But Varun, tactically, what's the view on railways? For now, do you think the best is behind us and it's time to take the profits off the table if you've not done that yet?
No, I don't think so. One has to keep in mind that we have a continuity in the government. I don't think so the plans are going to change too much. So there has been a clear focus on expanding rail networks and overall the kind of trains which came up, the Vande Bharat, etc. These are phenomenal changes we've seen, right? And just the beginning of it. We also have to keep in mind that exports of the same are also going to start. So there's a long way that these companies can go for, and we have started from a very, very low base. So I am very hopeful still on the railway space. In fact, not only on the railway space, but across any of the themes which are running so far. Yeah, it can be that valuations have been a little stretched, but there can be a little bit of time correction and then earnings growth catches up and you're again in place. I'm still positive on something like a defense theme or railways, etc., which was going around all the time. So I don't see any change to that narrative which was there.
Yes, and there was a positive news flow today on defense, wherein certain of the segments have been put up for indigenization yet again, certain components. So that's going to give another fillip to that sector. But talking about chemicals, Kunal, some of these names, Sumitomo Chemicals, Archean Chemicals, even Deepak Nitrite and Deepak Fertilizer for that matter, are perking up. Anything within the fertilizer universe that you would want to bet on?
Yeah, so I think Sumitomo Chemicals is something which has given a breakout. Again, a flag pattern breakout, which means the stock consolidating for last entire month. So I think the month of June, the stock was into a range of 460 to 505, 507 approximately. That range has been broken out, and this could probably mean that we could be looking at least a 40-point of breakout for Sumitomo Chemicals. Would look out for target in the range of at least 550, 555. Deepak Nitrite, on the other hand, even though the volumes are a lot more higher today for the stock, but because of the way the stock has run up from the June lows, I think it was almost at 2150, 2100 mark, and now it's currently at 2700 levels. And today, on an intraday basis, the stock has ebbed off from the day's high, which means that there could probably be have been some selling for the stock, or maybe some sort of profit booking. So would wait out for a buy on Deepak Nitrite. I think Sumitomo Chemicals is something which is interesting at current price.
Okay, that's the take on specialty chemicals. But Varun, Kunal, Naresh, we'll all let you go on that note. Thanks.
If you like this video, then like, share and subscribe to ET Now.